controversial CEO Elon Musk is at it once more, making headlines as he's decided to take control of Twitter, one of the most popular social media platforms. In the middle of the turmoil surrounding Elon Musk's Twitter acquisition, Tesla's stock is currently taking a beating, dropping almost $150 billion in value. The primary concern among investors is if Elon is selling Tesla stock. How did he come up with the money for the purchase? Will he be able to run Tesla and stay focused in addition to this? Keep watching to find out. After a few weeks of back and forth, Twitter's board of directors authorized acquisition recently, and Tesla's stock has been in a free fall ever since. The broader market variables are undoubtedly at play, but the majority of the dip appears to be due to the uncertainty around the Twitter transaction. There's a great deal of ambiguity. Elon Musk, the world's richest man, has sold $8.5 billion worth of Tesla stock to fund cash after agreeing to buy Twitter. In a letter to Twitter's board chair Brett Taylor, Musk claimed that he invested in Twitter because he believes it has the potential to be a global platform for free speech, and that free speech is a social prerequisite for a functioning democracy. "I now see that the company will neither grow nor serve its societal goal in its current form," Musk wrote. His reaction is to go private with the company. Tesla's CEO has put $21 billion of his own money into the financing package for the social networking platform, which he agreed to buy for $44 billion on Monday. According to filings with the U.S. Securities and Exchange Commission, Musk has sold 9.6 million Tesla shares, or about 5.6% of his holding in the company. Musk did not specify the reason for the transaction, but he did say on his Twitter account that he had no plans to sell any further Tesla shares afterward. Tesla's stock plummeted on Tuesday, wiping $126 billion off the company's worth, as investors worried that the world's richest man would sell stock to help fund the all-cash bid for Twitter. Musk's Tesla investment is now valued at almost $147 billion after the latest share sale, and he remains the company's top shareholder with a 15.6% stake. Musk is allegedly borrowing $12.5 billion to pay for the takeover and his own $21 billion. Another $13 billion will be provided by a bank consortium led by Morgan Stanley. It was unclear how the billionaire planned to raise the remaining equity funding. Musk owns 43.6% of the unlisted SpaceX rocket company, which is worth $100 billion. According to the Bloomberg Billionaires Index, Musk's current net worth is $250 billion. Tesla's stock has dropped 16% since Twitter announced its acceptance of the agreement, and there were massive stock sales as soon as it was reported. Throughout the week, Tesla lost nearly $150 billion in market capitalization, and it doesn't appear to be slowing down. There seems to be a considerable ambiguity surrounding the Twitter deal and its potential implications on Musk and Tesla. One of the major fears is that Twitter will divert Musk's attention away from Tesla, which is unavoidable. The only question is how much time. Because of the type of company Tesla is and Musk's impact on it, Musk reportedly valued his time at Tesla at the worth of $1 million per minute. Another important factor is that investors are unsure whether Musk will sell more Tesla stock to fund the cost of the Twitter acquisition. Musk has already offered Tesla stock in exchange for $12 billion in debt, but he still needs to develop $21 billion in cash. Musk hasn't said whether he wants to sell Tesla stock to fund the transaction cost, but you can't deny that it's a distinct possibility. It could be happening already, which would explain a portion of the stock decline. And if so, Musk would have to reveal it in the coming days. We're not sure if Musk is looking to sell. We should find out in the next few days if he is. What's more fascinating is that he can't allow Tesla's stock to fall too low, or he won't be able to secure the loans he needs for the acquisition secured by the value of Tesla stock. If Tesla's stock falls below $750 per share, it will become a concern, and some of the institutions that have offered Musk money may withdraw their offer. Musk has also stated repeatedly that he would be the last to sell Tesla stock, which, if true, would send a negative signal to investors. Last year, he did it mostly to pay taxes on stock options as part of his CEO compensation package. His stock portfolio increased. It's a very different thing to purchase a social media site that would limit his time with Tesla. A takeover offer is the latest twist in Musk's Twitter controversy, which has lasted more than a week. On April 4th, he initially revealed his ownership of the social media behemoth. If authorized, he planned to join the company's board of directors, but afterward changed his mind. According to a source, if Elon Musk completes the acquisition, he may charge websites a fee for quoting viral tweets from verified Twitter accounts. Tesla's CEO is reportedly considering a wage freeze for executives and has a new CEO in mind to replace Parag Agrawal, who is stepping down. According to Reuters, Musk reportedly informed banks that he may decrease CEO and board pay at the firm as he tried to persuade bankers that he could find the cash flow to cover the debt underlying the bid. According to Reuters, Musk said he hoped to increase revenue by developing new features such as charging for embedding or quoting popular tweets to persuade banks to fund part of the purchase. A fee would be charged when a third-party website wishes to quote or embed a tweet from a verified individual or organization. Musk has mentioned other recent improvements to Twitter, which include the removal of advertising from the company's premium service, Blue. Although Blue is only available in a few places, including the United States and Australia, advertising accounts for 90% of Twitter's $5 billion in yearly revenue. The $13 billion loans from the banks are 7 times Twitter's estimated earnings before interest, taxes, depreciation, and amortization for the year 2022. The sale of 9.6 million shares at prices ranging from $872 to $999 a share was Musk's first since a splurge that raised more than $16 billion late last year when he asked his more than 80 million Twitter followers if he should sell 10% of his Tesla holdings. In a report published on Thursday, Wells Fargo analysts expressed concern about the potential for Twitter to become a distraction for Musk, and it's a concern for many investors. According to Wells Fargo analysts, there are 2 shareholders' worries. 1. Tesla is presently ramping up 2 plants in Austin and Berlin, which will more than double the company's worldwide capacity. For a CEO who already has a lot on his plate, running Twitter could be a distraction. 2. The specifics of the takeover finance are opaque. Elon's most liquid assets are his $170 billion worth of Tesla stock. Meanwhile, the Tesla CEO is already embroiled in public and contentious confrontations with regulators, which occasionally include ugly remarks. The SEC subpoenaed Musk and Tesla earlier this year after asking his tens of millions of followers if he should sell 10% of his Tesla assets in an informal poll, for which the bulk of his supporters voted in favor. Tesla is currently going through what many consider a tough season. Automobile manufacturers, including Tesla, are dealing with rising battery raw material costs and a semiconductor chip shortage worsened by Shanghai's COVID restrictions, while Tesla's automotive revenue climbed 87% year over year to $16.86 billion in the first quarter of 2022. In its earnings report on April 20th, that it missed nearly a month of build volume in Shanghai owing to COVID shutdowns. Musk's aerospace company SpaceX seems to be experiencing difficulties. SpaceX's Starship prototypes have completed many high-altitude flight tests, but the prototype's next important step is to enter space. The business is creating a spacecraft called Starship that will one day go on a voyage to Mars. Its progress was hampered last year on several fronts, and an orbital flight test is now awaiting regulatory approval. To proceed with the flight test, SpaceX needs a license from the Federal Aviation Administration and a separate critical environmental study. So what do we think? Elon is known for erratic behavior, and longtime investors would be hardly surprised at this turn of events. It's also unclear exactly how involved he will be with Twitter, but we know it's nothing he can't handle. If he's been able to handle wearing so many caps quite efficiently, we hardly think buying Twitter is what will tip the scale. It will no doubt be interesting to see what Elon does with the platform, but for now, we believe the future of Tesla will remain negatively unaffected. What do you think Elon's plans for Twitter are? Comment down below.